last hour of the conference or so. Thanks everyone for welcoming me, and thanks for inviting me to speak. I just feel honored to be a part of this event because I feel like it's a really interesting tipping point in the industry, and it's evident in this room of the diversity of people trying to make this sector a success. So thanks for having me, and I'm proud to be a part of this room. I thought I'd just spend 15 minutes talking about a few of the lessons that we have learned at Leapfrog Investments, investing in impact for the last 10 years. I wanted to make this practical because I know it's nearly the end of the day on a Friday, but also because I feel like we're at a particular point where there's so much interest and momentum for action that we need to be sharing lessons, and we need to be reflecting on what we've learned, and we need to be reflecting on what the key challenges are that'll help us grow bigger and bigger. So I'm going to keep it simple, but I'll first introduce you to Leapfrog Investments. And essentially, we are an impact investor. We call ourselves a profit with purpose investor. And we invest across Africa and Asia in companies that provide financial and healthcare services to low-income emerging consumers. This is social impact investing, and we are a private equity firm, to categorize us and put us in those buckets for people in the room. Essentially, our thesis is that there are billions of low-income people that we now know are not in need of aid, but are working individuals that can and will pay for services they value. And so the companies we identify and we invest in actually seek to provide those services to those people commercially and therefore sustainably. Leapfrog, as a fund, we now have $1 billion in commitments, having launched our first fund around 10 years ago in 2008. We've invested across 16, actually now 17 in the last month, companies. And companies now reach 91 million people, and 74.1 million of those are low income. We're really proud to count 43 investors across development and for-profit and complete commercial spectrums. And our companies also support over 100,000 jobs. So this is just a snapshot of our 10-year journey. And I'm an ex-Goldman banker, so I get really excited by this slide because when I put this up, we're not just talking about a financial KPI and how our AUM has grown over time. We're also talking about how we have progressively invested in companies that reach more and more and more millions of low-income people. You see, we got off to a slow start, but companies now reach 91 million people. 74.1 million of those are low income, and we track that performance on a profit and purpose basis quarterly. At the same time, we're really proud to say that these companies have achieved an average of 46.1% revenue growth over the course of Leapfrog's investment. Now, for anyone investing in growth private equity as a purely commercial play, I think that's pretty impressive. For people that are investing for social impact, we also hope that this grabs your attention because we think this profit with purpose model that we've been working on and iterating is really starting to show impact at scale. So I just wanted to reflect on 3 key lessons that I think we've learned over the last 10 years. The first one is that smart goals really matter. When we launched our first fund in 2008, Andy Cooper is the founder of Leapfrog, and he launched in 2008 at President Bill Clinton's Clinton Global Initiative, which is also a fantastic initiative that's catalyzed this space. We launched with the goal of mobilizing $100 million in commercial capital and reaching 25 million low-income people with insurance. Very specific, very clear, and we're not trying to be everything to everyone. If you want to invest in low-income access to critical services, Leapfrog is your bet, but if you want to invest in carbon, etc., that's not our focus. I think what that's enabled us to do is be ruthlessly focused on achieving those 2 things in all of our funds. And you'll see the results. I mean, the results that I spoke to earlier are a result of that relentless focus. But I also kind of draw this out because it seems really obvious, but often it's not. I still feel like the words impact and sustainability and ESG and responsibility and everything kind of get pushed up here and detract from what we're really talking about. People, environment, etc., in very specific terms. And for investment managers, we're so used to driving around specific things like IRR or money multiples. For us, it's been really helpful for investment professionals to be able to drive around something equally quantitative, and I'll get to the qualitative later, that helps us achieve both profit and purpose. And I think this now reflected in the Global Sustainable Development Goals. We aligned this initial objective with the Millennium Development Goals, but the Sustainable Development Goals are a fantastic tool that I think is enabling us all to come together around collective goals. We now align our fund goals to the Sustainable Development Goals very clearly. I think we span across about 7 of them, but it's a really powerful convening tool. The second key lesson for us, having invested across 16 businesses, now 17, is that high impact companies come in multiple shapes and forms. And I wanted to draw you to a specific example that I think is evidence of the general talk that we've heard these last couple of days about promoting diversity in this space and not calling one right or wrong or the other. When we started Leapfrog, I think we thought we would invest in small-scale social entrepreneurs. But we actually found that with that goal of reaching 25 million low-income people with insurance, actually more established insurers in these local markets were sometimes more effective at helping us achieve that goal. And I'll point you to 2 specific examples in our Fund 1 portfolio. The first is Bima, which is a mobile microinsurance company currently operating across 14 markets and reaching over 12 million people with insurance. Now, this company is only a couple of years old, so they've gone from 0 to hero in a very short time. And this is kind of, I think, what we think about when we think about social entrepreneurship and these really exciting, fast, high-growth companies. Earlier stage, still in a growth private equity allocation, but earlier stage. Bima are a fantastic and super high-growth company. They're one of the fastest growing in our portfolio, adding about 500,000 subscribers a month to microinsurance, delivered in places like Bangladesh, Tanzania, Uganda, Indonesia, Papua New Guinea, for example, really doing the hard stuff for policies as low as 70 cents a month for health insurance. On the other hand, we have Mahindra Insurance Brokers, which if anyone works in India or actually globally, they'll know the Mahindra Group. We invested in their insurance business to help build on an existing platform of distribution to rural Indians and help them develop health insurance for their segment of customers that had never had access to health insurance or life insurance before they actually became customers of Mahindra. Now, what's really interesting here is that I think most people wouldn't think of Mahindra necessarily as a social enterprise, but we've done the rigor of data on both of these companies and find that the customer segment they're serving in terms of income is very, very similar. Mahindra, as 95% of customers are low income, per the World Bank's definition. Bima, 96%. Mahindra, 80% of customers have never had life insurance before, and 97% have never had health insurance. And Bima, similar statistics across life and health across many markets. So I think this speaks to the size of the opportunity because there's such underpenetration of critical services in emerging markets, but also the fact that we can look at different businesses in different ways. And I think every business has the chance to be a high impact company. And for me, that also speaks to the opportunity across multiple different capital, across the entire capital spectrum. That we're not just talking about venture capital, we're talking about growth, what we're in. We could also be talking about public equities or other things. And I love the diversity in this room because I think we're all recognizing that. And then the third lesson for us is that measurement really matters. I I often sit in these conferences and wonder if, because we're so focused on mobilizing capital to solve some of these problems, we talk endlessly about the dollar value that we've mobilized, which I think is a hugely important indicator to test the strength and the success of this industry. But I tell you, if we walk away, if we come 10 years down the line and all we can say is that we mobilized $1 billion, granted, hopefully it's going to be much more than that, I think that would be a shame because we'd be the same as traditional capital markets. We need to be able to say something more for what we've achieved in social or environmental impact. And we spend a lot of time on this. The challenge, I think, is that income, for our purposes, for social investors, is not a traditional customer segmentation methodology. So not many companies outside of financial services will actually know the income of their customers. But we've worked on ways to actually understand who we're reaching, how we're reaching them, the quality of the products, etc. And from a commercial point of view, if you come to selling a business where traditionally you would be talking to investors saying, we've grown revenue by 5.5 times, and we've grown profit by the same amount, etc. This is the great company you should invest in. We can actually come to the table and say, plus this company has best practice international governance, and we've grown that over the course of our investment. And if you're investing in Africa, you really need to be focused on this. Plus, this company has penetrated a segment of low-income people, grown customers 15 times in the last year and a half, that no one else in this country is serving. That's a huge commercial proposition, actually, and we're seeing the power of social data as well as financial data. And from a social point of view, it helps us know that we're actually working hard at something for a reason, and we're actually achieving, or not achieving, frankly, our goal. Sometimes these charts don't go all that way. They also go this way, and we need to figure out why. We measure performance with two tools, kind of demand side and supply side. FIRM is our measurement framework that measures financial performance, the F in FIRM, but also seeks to measure impact, innovation, and risk management with equal rigor. Examples of which are on that slide prior. And then we have a demand side database that talks directly to the consumer. We call that consumer insight. We've actually interviewed around 10,000 or more customers across our portfolio over the last couple of years. And we talk to them to understand whether they know they have the products, whether this product is beneficial to them, if they actually are low income, if they're using this in the right way intended, if they're not, what feedback do they have on the product, etc. So we can actually test whether our impact is achieving what we intend it to achieve and check ourselves if it's not. We've aligned and worked with so many others in this room in establishing this. And I also think that's kind of the critical point we're at in the industry, where we're not just developing our own frameworks these days. We're talking and collaborating with others. And I do hope that over time, we move from IFRS and GAAP as global accounting standards to more transparency on these things, so we can actually measure every company in the world on such indicators. Accounting is an evolution. You know, accounting standards only really came into force about 30 or 40 years ago. So we're hoping to evolve that and kind of reflect this new type of capitalism. And then the final thing I'd say is, when we started Leapfrog 10 years ago, we used the words impact investing. And we actually were forced to move away from that for a brief time when people really didn't know what we were talking about. When we were trying to raise institutional capital in our second fund, we led with profit with purpose because it was a language that people could better understand, that we were talking about market rate, fully commercial returns benchmarked against emerging market private equity companies, compare us to the Cambridge indices and whatever else. But we're also talking about social impact. I think now people recognize that the two can go hand in hand, and the fact that you've got Goldman and all of these other people talking about impact investing is a fantastic thing. But just to define what we were intending to say is that I feel like we think about impact investing in a spectrum of well, 2 planes, not 3 as we talk about them traditionally. We're talking about financial risk and return on the one axis and social risk and return or environmental risk and return or whatever you define impact to be on the bottom. We think these two go completely hand in hand, so that if we reach millions of low-income consumers, that generates top quartile private equity returns, more alpha financially, and top quartile financial shareholder returns. Because when we talk about financial returns, we're really talking about equity investor returns. In private equity, how we talk about what we do is different to traditional private equity, is that we don't just focus on risk mitigation for social and environmental impact, but we seek to measure return in a way that's as rigorous as financial returns. And we feel like this is a helpful framing in terms of moving us, but also the industry, I think, towards profit with purpose or impact investing instead of ESG. I think we've got a massive shift from the financial side over to investing for impact, and we've got a massive shift on the social side up to seeking more commercial returns to make solutions to development challenges more sustainable. That's all. Thanks for having me, and I hope I was brief enough for a Friday afternoon. I think I'm going to hand over now to Acumen.